session has been subscribed by people. It shows how the industry is quite interested and willing to comply. Ladies and gentlemen, one of this issue, the CBR, is not a new concept at all. Those of you who have been licensed before 2008 would know that as an FSP, you had to submit on an annual basis, depending on the classes of business. Of course, you are authorized for compliance. But however, the last compliance reports to be submitted was sometime in 2008 when the FSP was transitioning into the FSR environment, and the CBR, which was comprehensive to be wide enough, not only focused on FIs and all that. So it has been, ever since, it's been a journey developing this particular CBR, and up to this point. It's no different from not much different from the first, except that this is it covers quite a wide range of issues. And it is basically a quantitative report that will be faster to complete. And then there is a phased-in period, and you can either submit through an XML and systems or manually on the web-based form on the website. We are using information on each question, and this will also assist in benchmarking. Having up-to-date data on all entities and inform regulatory changes when needed. It is part of the strategic approach to a more comprehensive and overarching supervisory framework that the FSCA is adopting. It has strong link in which our approach has been proactive, intrusive, and looking at inclusion of players in the market and in custom, and will allow us to do trend analysis at industry level as well as solo entity level. It adds value to their business, seeking risk and identifying gaps in the market, but also in their own controls. I think in a nutshell, Charene, before I hand, that sums it all and provide a background as to the rationale behind this and what it actually entails. Thanks, Charene.
Thank you very much, Manasi, for those kind words. As Manasi has said, this is a journey, it's not an event. So although we have an event this afternoon, this is really just the start of the whole consultation process. And we are going to be working with you for at least the next 4 years on the implementation, and we'll come back to that in a little bit of time. As I've mentioned earlier, you are welcome to participate in one of two ways this afternoon. You can type your question or your comment in the chat box. Alternatively, you can raise your hand. We have Akash and Rampersat with us this afternoon, and he's not only helping us to sort out the technical issues with all of the workshops, and we are incredibly grateful for that, but he's also here to just talk about a practical problem that we picked up earlier this week in another workshop that some people might experience with the customization of the Omni CBR template itself. So Akash, can I hand over to you and you just explain to people, if they have the problem, how to solve it?
Okay, thanks, Charene. Good afternoon, everybody. Okay, so I'm going to share my screen and show you the possible scenario, or rather the issue that one experiences when trying to open the Excel document. Can everybody see my screen? Okay, good. So if once you open the Excel document, you'll get this line on the top that says enabling editing. So if you click on this, it's going to enable you the function to edit the document. However, we found that on some settings on the laptops on Excel, you can't go further if you go to the company information, and if you select here, for instance, if you select both, and if you select here, if you say financial advisor, the document's supposed to open up further at the bottom as soon as you select those two. And even if you click on customize, you get an error that says you need to enable the macros. So in order for you to do that, all you need to do is click on File. You'll then go to Options on your machine. You will then go to Trust Center, right? And then you click on Trust Center Settings. Once you're there, you will select the option that says Macro Settings. And then you will enable the last one that says Enable VBA Macros, right? And then you will also select Trust Access VBA Project Model. Right, once you've done with that, you will click OK. You'll click OK again, and then you will save the document on your desktop or a specific folder that you would like to save it in. So I'm going to save it on my desktop, and then I'll show you what happens once we open the saved document. So I'm saving it on my desktop, and then please save it as Excel macro enabled workbook. So you click on Save. Okay, the document is saved. All right, let me close that. Okay, now on your desktop, you'll find the document there with a little exclamation mark on it. If you click on it, all right, the document will open for you. Okay, and then now if we go to company information, and if you select your financial advisor, you'll see the document opens up further for you, and then you can start completing it. And then even if you click on customize, it'll take you to the next section, which Juanita and then will explain to you. And then that's how you enable the macros on your machine. Thank you.
Thank you very much, Akashan. I had that same problem, and by following these steps, I could actually, in exactly the same way that Akashan has shown us now, I was then able to access the document as well. If anyone has a problem with this, we can repeat these steps again, maybe after the break. Because we have quite a long session this afternoon, let me just tell everyone in advance that we do plan to take a break at about 3 o'clock. So we are ready and here for the rest of the afternoon, and we are looking forward to your participation. And not to threaten anyone, but I can see your names. So if you're not asking me questions, I'm going to pick on you and ask you questions. Not a threat, just a promise. Anyway, let me get back to the business. I'm joined today by, as I said, a number of my colleagues, and one of them is Juanita Smit, who has been instrumental in the development and just making sure that none of us go completely crazy in the development work on the Omni CBR. Juanita, I think maybe just as an introduction, do you want to just do a very quick recap as to where we've come from with this journey?
Thank you, Charene. It seems everything on my laptop is also a bit slower today. Good afternoon, everyone. As Charene introduced me, I'm Juanita Smit, and I was part of the team that helped develop the Omni CBR. We had experts in each industry that assisted us in the development, and this has really been a 4-year journey for us in total. Well, 2 years to actually finalize it, but also a lot of learnings from the implementation, from the market conduct return for the insurers, who's the only industry that's had something close to exactly this type of return. As Manas said, you have done your compliance reports before 2018, specifically for this industry. And when we started looking at how to incorporate the financial intermediaries into the Omni CBR, we looked at what is the risks that you are facing in the industry that we would want to regulate? What are some of the compliance aspects that we need to see? We also did an analysis and benchmarking against international standards and tried to accustom it to our South African market. I think a few things that I just want to set your mind at ease that did come up in some of the other workshops. Again, this is a journey. This is, we realize that all the industries are not at the same level of data maturity, and therefore some have a lighter version of the return than others. For instance, because the insurers have been completing these returns for the last 4 years, they're going to a next phase now with more detail in their return. This will be a first type of quantitative market conduct return for the phase industry, the financial advisors. We realize that some of you do have systems, you're very well organized in terms of systems and offices and getting data together and knowing your clients. We also realize there are smaller entities that basically work with paper files and don't have everything ready, and that is why it's a long journey. We're showing you what we think you should have. And like Manas said, this is not just for us to be able to regulate you or to ensure that you are compliant, because some of the questions are just straightforward compliance questions where we need to check your compliance like we did on your compliance reports, also to update our system. So a lot of the information on the company information sheet is there for us to update our system so that we don't have to ask for regular information requests or data cleanup. Also, we've seen that this is one of the areas where there's the most non-compliance in this industry. We're not updated of changes timeously as we're supposed to. So this will ensure that our own records are up to date and that we can rely on the data that we're having. So for the smaller entities, when you submit this, you're going to be able to log on to our web portal and you'll be able to do a physical submission on a web-based form, which looks like this form, and it's an Excel form, and then you'll be able to submit it. You'll be able to go in and out and submit when you're ready. For the bigger entities, there is also the possibility of submitting it with XML codes, and those are the codes that you've seen in the return. And that kind of makes it a more automated process of pulling the information from you. You do have a good idea now what we're asking. So they can already, although we will consider all comments and have everything that's said in the workshops considered. And remember, we said we want to see, you know, if there's a problem on practicality about the contents, we want to see other suggestions because we're partners in this. We need this to be sure that we are a good market conduct regulator, that we can protect customers, that we can protect institutions, that we can see where the gaps are, that we can see later on do more predictive analysis and see what kind of risks are starting in the market. Also building confidence in the market for customers. And we have to also protect the consumers if we see that something is going wrong in terms of an entity, that we can step in and help before it's too late. So some of the questions that we've dealt with and that I'll just answer now as well, they're all questions that are purely prudential. You'll still be submitting your financial returns to the FSCA. Some of the questions here seem very similar to that. It's not, because we're asking it at a different level. We're asking it in this return from a market conduct level. On your financial returns, it might be at a total level or at a higher level. And here we would break it down maybe into what type of entity you are specifically, how is the book comprised of, not just what is the total value of your book, but also where do you actually generate that information from or your income from. You'll see that there's various sheets. The all sheets, and we explained this in the webinar, is information we're going to get across the industry, and that's why we're saying this is a cross-cutting sectoral return, so that we can get the information and be able to do some benchmarking on you as an entity from one quarter to the next quarter to see your improvement, your growth, where is it coming from. Also to make some assumptions maybe about some of your compliance in terms of maybe commission being received versus what you're selling. It's a more automated process on our side, so we also have to do a lot of system development and a lot of research or resource upskilling and expanding on our side. That's why it's going to roll out over a few years. So when we ask the total on the financial or the credentials or your financial statements, yes, that we'll be analyzing, you'll see we'll break it down into different levels on the market conduct one. So there's no duplication. If you look at it and you still feel there's a duplication, that you can't see what is the market conduct reason for asking this question and breaking it down this way, then you can flag that for us. Every question in this return is going to be used. It's not going into a big black hole. We said it on the webinars as well. And the idea is to use information to give feedback to entities. The insurers would know that we've been giving them feedback for the last 2 years, and we really want to do more publication of benchmarking across. The other thing that I can maybe preempt is how did we decide on how we want to break down the target market? So we had to give a criteria for target market. If you want to do this comparison, especially if you want to do it across sectors, and later on also see within a group, if a group is going into the same direction, have the same strategy, you need to understand their target market. They need to understand their target market and see whether everyone in the group is going into that same direction or whether there's differentiation within the group. Also, you would only know whether your distribution channel, whether your method of selling, whether your method of getting leads, whether the products that you're selling is really suitable for your customer. That would only happen if you actually know and understand your customer. And we have said this on various occasions at various times. And that is also why we're saying this is not something new. It's just the way in which we're obtaining the information that's new. So we split it into retail and business. We don't differentiate in business between commercial and corporate. So retail is basically your natural person, and we then put it into categories of age. We chose that because we had to choose something that would work across the sectors where we know you have this information, where you could actually provide it. We're not saying it won't take work to do so. And again, that's why we're rolling it over a few years. And that you would be able to update it on an ongoing basis without having to go back and back to the client and trying to get the information. We also use the assumption that people in different age categories have different levels of needs and skills and knowledge. And therefore, to be sure that we're talking about the right appropriateness, we need to break it down into ages. And we also ask about gender, which you also can get from the ID numbers that you need to have. And that is more for inclusion. We want to see how the products are spread across ages, but also over genders. And then if you're an FSP and you're a bank, for instance, we ask you even more detail on your business composition additional sheet that goes into that risk area where we know you would have salary bands, where if you're an FSP and you're an insurer, for instance, you wouldn't necessarily have that type of information. So we wouldn't ask you to get it now or to deal with it. And on the business side, we're doing it according to your annual turnover or fund value. And how we've broken it down there into categories has nothing to do with any other possible breakdown in other legislation. So it's basically based on how we see vulnerability from our side, how we see risks from our side across the financial industry, and how we want to manage that. And again, based on certain assumptions and what we've seen over the years in the different sectors that we want to track there. Maybe one last thing that I can maybe preempt and also answer is about the terminology sheet. So the terminology sheet, and this is just for the few in the room that have not watched the webinars, but I would really suggest that you do before you give any written comments, because we do answer a lot in the webinars as well. But the terminology sheet is not there to define every term used in the return. The terminology sheet, if there is a definition for something that we're asking and it's in your legislation, you will use that. The terminology sheet is really just there to give guidance where there isn't a definition in legislation, and we want to assist to help you understand what is it that we're asking in that question. So then it's an additional guideline. Or it is where there is a term, but there's different definitions for it in different legislations with little nuances, and it's on the all sheet, so it will be answered by all industries. Something like that would be what is a complainant, for instance. And then we would have a description on the terminology sheet that would apply to this return, and that would assist you to know how to answer this return. We do realize that there will be some questions on some sheets that won't be applicable to you, and you will only put in a 0 then. We don't want to make assumptions with the first round of submissions to say certain things will never be applicable to a certain sector. We have learned from the past that although certain products shouldn't behave in a certain way or have a certain feature, or certain entities shouldn't be offering certain services, they do. And we start realizing this through the returns, and then we're able to engage. Remember, the Omni CBR is part of our toolkit that we use for supervision. And this is just an offsite monitoring tool. So the supervision teams will use this to see flags. Where are you an outlier? Where is there an answer that we don't think should be there? And then engage with you on that so that we can assist you and get everyone on the same page. And that is the tool that we want to use here. Also, because of the magnitude of the industry and the growth in the industry, everyone is resource constrained. And that is why you need a strong offsite monitoring tool like this, where you can do quick analysis, give feedback, flag where there needs to be flags, and address those flags. And that's also why you'll see, and I answered that question for quite a few people that couldn't get into the different workshops. The questions for the various FSPs is the same. We just needed to split it into 2 workshops because we knew you're just too big and there's going to be too many participants, and then everyone might not have a chance to speak. But whether you're bigger than a 5 million annual revenue FSP or smaller, the questions would be the same for you. We are just very cognizant of the fact that you might be submitting it in a different way. Then in terms of the phasing period, like we said, we're suggesting a 2-year phasing period when we have a final return. And again, look at the roadmap. Now it's just comments on the contents. So don't worry about the cells not working the way it should. As long as you can customize and see your sheets and be able to complete it, then that's the way. And if you didn't catch everything that Akashan said, we're going to try and put all the workshops on the YouTube channel, but it will depend on the size of them and whether we can do it or not. Otherwise, we're going to try and have a frequently asked type of question and answer document published. But you can also send an email to the query inbox or to me. I have those instructions written down. I'm not good with technology, and luckily for me, my return worked just fine. And there's a lot of people whose returns customized fine. It's really a setting on your laptop, so your IT department might also be able to help you. But otherwise, you can mail me, and I'll send you those instructions as I wrote it down for you. Okay, I think that answers some of the questions that we had in the previous sessions. Thank you.
Thank you, Juanita. And just for those of you who might have missed it, we have hosted the, we've posted the instructions in the chat box as well. So if you scroll down the chat box, you will see that there. So I'm trying to, as I said, not miss out on any questions. So Jenna Lee, and welcome back. Jenna Lee has attended some of our other sessions as well. Nice to see familiar names and faces as well. You asked about the all movement of money retail sheet, and specifically the difference between questions 2.1.1 and 2.2.2. So I'm looking at the questions, and I'm going to ask you, Anita, to just keep me honest here. But question 2.1.1 is the total value of money held on behalf of customers in a nominee company. And 2.2.2 is the total value of money collected directly by the entity via debit orders. So generally, I'm not sure that that is the difference that you're actually asking. But 2.1 as the overall, as the STEM question, is asking about the total of money, total value of money collected at the end of the reporting period. And then if you look at the breakdown of money, it's money that is then held at various places on behalf of the clients or the investing party or the insurer, whatever the case may be. So it's about money that you've collected and where that money ends up. Whereas the STEM question of 2.2, and if you look at the breakdown of that, has to do with the format in which the money is collected, not necessarily where the money ends up being held. So generally, I hope that that has answered it. But if it doesn't answer your question, do come back. And Juanita, do you want to add anything?
Yeah, maybe just to clarify also there, Charene, I think you explained it quite well, but 2.2 refers to you as the FSP. So this is with direct collection by you yourself and how you do your direct collection. So obviously 2.1 about where the money is held could be collection by other entities, like Charene said.
Thank you very much. Then the next question that we have is from Tufik. I hope that I'm pronouncing your name correctly. And if I look at that, your question is on the company information sheet. And your question is the level 3 differentiators. How does that work? So the definitions where it's not a term that, so maybe let's talk about terminology. So we have a terminology sheet, and on the terminology sheet, we that defined those terms that are not defined in a specific piece of legislation, and it also might have different common uses. So where a term is defined in legislation, we did not define it again because you would obviously default to the definition in legislation. Where a term is very specifically used in common usage, in common language, so regardless of which definition you look up in a dictionary, you would find the same meaning attributed to it. We also did not necessarily go and define it in the terminology sheet. But money is a good example of a term that we defined because we needed to find a catch-all phrase for money in its various formats, which would include money collected in the form of cash or debit order or EFT transactions, whatever way in which it ends up in various bank accounts, it starts out as the common definition of money. And Juanita has a very elegant way of explaining that. I did a very plebeian way of explaining it. So Juanita, do you want to perhaps just come in on the terminology before we carry on with the rest of Tufik's question?
Yes, Charene. Actually, I was looking at this question, and I was thinking if we're asking the same, if we're talking about the same thing. So in terms of money, we wish we could get a better term, and you're welcome to suggest any to us, but keep in mind, it has to be a term that can be used across industries. So from retirement funds and 13B administrators to insurers, to micro-insurers, to investment providers, to the intermediaries. So we couldn't use anything that says payment or contribution or premium because it wouldn't capture all of that. And that's why we use the term money. And that's also why it's movement of money. And when we also talk about, there's a question on the first sheet that you'll have, the all business composition sheet, where we actually ask you for the breakdown of your income, and we have money. So that will be your actual premium received or your contributions received versus the interest on it and the rates that you ask on it. That's when we break it down. So that's what we mean with the money. It's about, and there we break it down for charges, fees, and others. But if I look at Tafik's question about the level 3 activities on the company information sheet, I think the question refers more to these activities in terms of COFI. So not all the COFI activities that you will be licensed for under COFI appears here. We only included the ones that we're 99% sure of, looking at how we actually gone through the consultation process here. So your level 1 shows whether you are category 1 or category 4 FSP. Level 2 will then show specific areas or industries. Level 3 will have these type of activities. Now, the activities do not affect the customization of your return in terms of what columns you will see when you customize. You have to customize to actually see the columns that are just applicable to you. But you do say yes or no to these activities. And the reason for that is for us to start getting data on it. But it's also for the industry to start getting accustomed to the terminology being used in the COFI bill. And what does that mean? And what are you actually doing? So when the bill actually becomes an act, and you'll see in one of the webinars, we'll also try and explain how this works concurrently together, then it's not a new concept for you or a new explanation as to what type of activities are you performing and for what type of license would you be applying. Thanks, Charene.
Thank you very much for that, Juanita. And that was definitely the second part of Tufik's question. We then have a question from John Horsfall where he's asking where the data upload facility will be installed, per FSP or a separate facility. So John, Manas also alluded to this in the introduction. You will have two ways in which you can select to upload when we get to uploading. So we're still away from that. But you could either do an XML upload, so that would then be per FSP from the FSP systems to the FSCA systems, or you would be able to do a manual capturing on the web portal. And that would allow, we're expecting that smaller FSPs who perhaps don't have the XML facilities would use the website, the web portal upload facility, and they would be able to access it multiple times before they submit their report, so that they would be able to, for instance, do a section of it, capture it, and even if multiple people in the FSP have to participate in the submission, that they would be able to use the capturing facility on the web portal before they then submit it. So you would have one of the two facilities. Juanita, do you want to add anything to that?
No, Charene, I think you actually you captured it well. The one thing we are looking at, and it did come up in one of, well, actually in a few of the workshops, if you're an FSP and you are an insurer who already has, like a long-term insurer, already has 36 other tabs that you need to complete. So that kind of puts you in the picture, how intensive the return can get because they're doing it down to product level. What we will be considering is then that because as an entity, all the information that you're completing on the all sheets will remain the same. You'll need to complete different information for us on the product information sheet, but then the FSP sheet should just actually be an additional sheet that you should be able to do and not have to repopulate the all sheets. But it's something that we're still considering because we do want to return per license. It does go into the BI. We have a BI database, and currently we're already doing work that we want to do with the Omni CBR and our current CBR submissions, where we're building dashboards from it and building reports from it. So by the time we get this information and we know that it's true and complete and accurate in 4 years from now, that we're able to draw the reports, and that everyone in the industry, in the FSCA, anyone in the different departments can have access to the information and pull the information, and we can start seeing also the information on group level.
Thank you very much. There's a couple of comments around the fact that we ask for information that we should already have on our systems, and that is correct. One of the things that we do want to do is to get you to just confirm that that information has stayed the same. One of the things that we find across all of the sectors where reports are being submitted either currently or in the past, like with compliance reports, is that information changes at business level, and we're not always updated quickly enough about these changes. Those of you in the compliance field will know that this has been an ongoing problem that we've struggled with between industry and the FSCA and the old FSP for many years. So this is also a reality check to just go and check that the information is correct. We are looking, as Juanita has also said, looking at business information. We're looking at ways to integrate it. But at this stage, entities with multiple licenses will have to submit a report per license. We won't be able to do currently one entity, one report, and it cuts across all the licenses at the same time, but it is certainly something that we are looking at, and hopefully we'll be able to sort that out with next year's stage of the implementation, where we are going to be testing our proposed implementation with a couple of volunteer organizations. So I hope that your ears have just pricked and that you are seeing that this is an opportunity for you to test and participate. Then I'm going to go to Nelda's question, the business composition retail sheet. So sorry, let me just see if I can find that. Question 1.20. Should it not rather read on behalf of rather than to the entity? Nelda, trying to scroll down very quickly. Yes, I think that's valid. Thank you very much for that. Then Shimon says, for a brokerage or intermediary under financial advisor, should both be completed or one only? Brokerage, okay. So you would complete one but you would be able to select the multiple options that apply to your business, because we do recognize that entities on one license could have different units within the entity. I see we have a hand that is raised. And Billy, Akashan, could you give, Billy, you have microphone access, please go ahead. Billy, just unmute. There you
Can
are.
you hear me now? Hi, Charene.
Yes, I can hear you.
Thanks. I warned you that we were keeping our questions for these sessions, so mute me when I get irritating. The question that Shimon asks, it's a sub question that I also flagged, and that's why I'm kind of interrupting on this question. So when you select your activities, you know, there's provision for financial advisors and non-mandated intermediary, and I'm assuming that refers to a non-mandated intermediary that is a binder holder, because every intermediary that does not have a binder, does not have a mandate, is by definition a non-mandated intermediary. So I think it's creating confusion. So maybe it must be clarified that that refers to a binder holder as opposed to just a non-mandated intermediary, if you understand what I mean.
Perfect. So please make that comment when you submit your written comments.
Okay.
You know, we do get used to terminology, and then you assume everyone has the same meaning associated with it.
So it's become like, everybody that talks about an non-mandated intermediary refers to a binder holder, but it's not clear in the definition. I think that's probably maybe where the question comes from, because that opens up new tabs, and then one you don't know what to answer. Okay, thank you.
Thank you, Billy. Juanita?
Yeah, thanks, Charene. Thanks, Billy. I'm not sure that I'm following exactly what Billy is saying. And I think these sessions we should also use to just be sure that we're on the same. It's better than having the comments. I prefer having discussions and understanding it better. Billy, where are you referring to where you're saying about this, that we're saying non-mandated intermediaries?
Okay. And sorry, I just wanted to unmute myself again. So if you look at the activity information, all right?
Is this now on the company information sheet?
Yeah, so you get to brokerage, okay? And then, so now brokerage, so that's now IFA space in most people's minds. And then you get to non-life, non-mandated intermediary, okay? But by definition, every intermediary that does not have a mandate is a non-mandated intermediary. So that should be non-mandated intermediary binder holder. Understand? Because that's another activity, and I think that's now leading to confusion about which one do you select here. Do you select both? Because you would only select, in my view, non-life mandated intermediary if you are a binder holder. Otherwise, you would just select brokerage.
Yes.
You understand what I'm saying? So it needs that qualification in the end of the activity to say binder holder. But I think that's what is leading confusion. Yes.
Okay, now I'm following you.
Okay.
So if we put binder holder there behind those ones, even for the underwriting managers, that would make it clearer for the brokerage, or with the underwriting managers from main?
So no. So you brokerage stays. Underwriting managers are fine, because that only all underwriting managers have a binder agreement, but not all non-mandated intermediaries have a binder agreement.
Okay.
So it must be non-life mandated intermediary binder holder, and then life non-mandated intermediary binder holder, so that you realize that the activity that you're trying to activate here is that of being a binder holder, not of being a non-mandated intermediary. If I'm
that's a valid point.
Yeah, okay. All right, cool. Thanks.
Thank you.
Thank you, Bill. Sorry, my microphone did not want to unmute properly. I see there's a lot of questions and comments, and thank you very much for that. I just want to scroll up and try and make sure that I don't miss any of this. Then, okay, I've dealt with that. For those of you who are experiencing load shedding, as Juanita has said, we are going to do our best to host these workshops on the FSCA YouTube channel. Our ICT department is just waiting for us to finish with the workshops, and our last workshop is next week on Tuesday, the 12th of July. And then they'll be able to see whether we can actually host them, because some of them are very long, and that obviously then has an impact on bandwidth. But if it's at all possible, we are going to be hosting the workshops. We do have the 3 webinars already. The 3 webinars, the first webinar talks about the legislative background, as well as the impact of COFI and the timelines. Then the second workshop talks about the sheets that applies to everyone, regardless of your license. And then the third workshop looked at the specific sheets that you would only complete if you have a specific license. So we tried between the 3 workshops to cover everything. And those of you who haven't had a chance to look at it yet, they are, I think, very comprehensive. I've received quite a bit of feedback that they are helpful, although we do acknowledge that they are quite long to sit through. But at least you can stop them and have a cup of coffee before you carry on with the rest of them. So we'll try our best to do the same with these workshops and host them as well. And we are open. There is an email address that people can send queries and comments to. And then we obviously on the website have the comment facility, and the comment facility is going to be open until the 10th of August. So hopefully you'll have an opportunity to participate like that. I see we have another hand. Paul Lawrence. Just give us a sec, Paul. We'll give you microphone access now. And Paul, you should be able to go ahead and unmute.
Hi, good afternoon, Charene. The terminology, and just thinking that we have quite a large number of small FSPs who don't have a regulatory requirement to have a compliance officer. And when it comes to the terminology, I think it's a bit much to expect them to have to look at your terminology sheet, and then you have a reference to something within the Financial Sector Act or the Pension Funds Act or something else, and then expect them to go and read that to find out what it means. But I would hope that you would actually have something for terminology, that it is all available on the actual sheet itself. Either as a hyperlink, which is, if I hover over it, the definition will actually come up. So I, as an FSP who is not a legal person, can understand what it is you are asking me to complete.
Thank you, Paul. I'm going to hand that to Juanita.
Thank you, Paul. So ultimately, when the Omni CBR is done, and that you'll also see in the version that we have in phase 2, when we really look at the functionality of the Omni CBR, you will see when it's web-based and you hover over something, that actual description will come up. But it is, again, the terminology that we have on the terminology sheet. Currently, it only refers to that number of terminology. When you look at the question and you look at the blue column, column G, you'll see the numbering, and you'll have to go back and look at it. In terms of the question about the FSPs not having compliance officers, and we're referring to a certain act, so you'll see we'll only use, so in the preamble, we said your specific legislation is applicable to you. And we would expect that an FSP even just knows the FACE Act because they're registered in terms of the FACE Act. The type of questions that we're asking where you feel that we should actually be giving additional guidance and maybe have something in for terminology, you're welcome to flag for us. We can't explain everything, especially because most is across the all sheets. That's for all the sectors. So I think when we started, we had more than 300 terms to use. And then we realized, but if you're in that sector and you work with that legislation, that you would understand what we're asking. Is just when it's maybe not in any legislation and it's not clear, or there's that like we said, there's little nuances, then we give the additional description. We also try to put the questions as clear as possible so that you would, even if there wasn't a terminology sheet, understand what it is that we're asking of you. I think experience has just taught us with the insurance one that small things that we think people understand and have a common understanding of isn't always so. But if I, for instance, looked at what we're asking on your sheet, and it's about the products that you're licensed for and under which products you're licensed, even if you didn't have a compliance officer, you should be able to tell us which products you're selling, which you're licensed for, and how big your book is in terms of that. And then the second section on your specific sheet deals with the type of agreement that the entity entered into. And again, I would think that you would know terms like non-mandated intermediary and underwriting manager and so. On the all sheets, there might be some confusion. If there's something there that you think even intermediaries that don't have compliance officers might not understand, but then again, like I said, you're welcome to flag it and we can look at adding that. But we also must be very cautious of the fact that if you add too much terminology, you can actually cause more confusion. And that is where we were at a stage with the 300 definitions or descriptions, because they're not definitions, they're descriptions. And that's why we said, okay, no, then that's just going to confuse everyone. Everyone has an understanding of what this is in their sector. Let's explain the things that we think might cause confusion. So maybe to that point, if you see something on the all sheets that you do think any FSP, licensed FSP, might get confused with, then you're welcome to highlight it and we'll look at creating some terminology for that. Thanks.
Thank you, Juanita. Paul, I see your hand is still up.
Yeah, thank you for that, Charene and Juanita. Yeah, just as an example, and maybe you're going to have multiple questions around it, but if I look at the all sheets for business composition retail and question 1.2, state the total value of the financial products /funds /services in your book of business at the end of the reporting period. So the query I would have from an FSP is that I'm sitting here and what exactly are you asking? So I'm a life broker and I have possibly some investments. So am I totaling up the value of all the investments, so the investment products that my clients have? And if they have life cover, do I add all the life cover that the client has because that's the value? If I've got funeral policies with multiple lives assured, do I add all the people involved? So do you get the idea that it's not particularly clear about what you're actually asking me?
Yeah, if I can come in, Charene. So, you know, when you sit at our offices and you look at this, everything is crystal clear to you. So maybe if I can, and I see your point, I do see your point, but remember you're completing this as an FSP and we're asking you, and that's why it's that slash, when we ask you about the value. So the first one was to say the number of financial products, funds, or services that you're offering in your book of business. As a life insurer or broker selling life insurance, that will be the number of policies. That's your financial products and investments that you actually have, but it's all in policies, whether it's investments or life cover, or even if it is a contribution to pension funds and so forth. So you would count the products. And then when we ask you about the value, if the value you even calculated before this return, you used to calculate the value of your book. And when you give in your financial statements, you give in the value of your book, you as an entity. We want to know how big you are. We want to know where do you offer products. And then we want to know, because the next question says now out of your value of your book. So where you get your money from. Is it from the money, so the premiums that you get, or is it the charges or the fees? Sometimes when we want to understand a question and what we're looking at, it's not just about the one question. You have to see the picture that we're trying to paint here and what is the risk that we're looking at. So if you look at those three questions together before we get to your customer and the breakdown of your customers, it's about you as an entity and the value of your book. So the premiums that you get in, the contributions that you get in, you as that FSP. how big is your book? How, if something had to happen to you, if your business had to fail, what is the impact on the industry for us? How that value out of that book, how did you generate it out of how many products and services? I mean, one of the things that we've learned in the insurance industry when we started looking at direct premium collection, for instance, is that there's so many brokers that are actually making more money out of premium collection than they're actually doing out of the commission for selling the policies, for instance. And that's where question 3 comes in. So you have to look at it when you answer the return. You answer the return as the owner of your business, as your licensed FSP, and what is in your book. So the value of the policy is not in your book. That's in the book of the insurer, because that's their liability. It isn't what you're going to pay out, if that makes sense. I don't know if I explained it well enough. Again, like I said, to us all is clear as mud, I suppose.
Thanks, Juanita, and thanks, Paul. I'm going to come back to you just now because Sarel has been waiting quite patiently. So if we could go to Sarel. Sarel, you should be able to unmute your mic, and then Paul will give you a chance after Sarel. And then I see we have some other people as well. So please just stay there and wait. We will get to you. John Horsfall, you typed a similar question to what Juanita's just addressed in the chat box. So I think we have addressed your question, but do post another question if you have a follow-up. Sarel, let's go to you. Sarel, just unmute your mic. Okay, it looks as if we might have a problem with Sarel right now. So let's go to Paul and then we'll come back to Sarel. Paul, you can go ahead.
Thank you, Charene and Juanita. I understand what you're trying to get to on that, you know, what is the risk if my FSP fails? And yes, so the value of the book, I wouldn't be taking the life cover of all my clients as my value, but largely the value of what I have is the commission that I'm going to be earning. So for some of that, that's provided upfront, and I may have an ongoing stream of monthly income as a result of it. So would I be giving some indication of what my income stream is? And you know, so I still am very uncertain as to exactly how I, as an FSP, would answer that.
And I also saw, and I'm not great with the comments, that's why Charene is in control of all the comments and everything, but I saw one coming up also asking about annual income. So we'll take the point that we need to maybe explain this and give a better description for it, because I'm sure because it's on the all sheet, it might be applicable to the other sectors as well, and they just didn't bring it up. But you'll see the way that we structure the question we ask for at the end of this reporting period. Now, the thinking behind of this, and just to touch on a question also that Roy asked earlier about implementation, it kind of all links up together. So in the implementation period, we'll probably ask for submissions on a biannual basis to give you an opportunity to actually build the systems, get your data in the format that we want, and be able to submit it. Then when we're done with the phasing period, it will be quarterly returns. We work on calendar quarters so that we can get it across the industries at the same time. We need to do that if we want to do the analysis and the benchmarking and actually be able someday to be in a position to give feedback. And also if you want to do trend analysis, I mean, you know that you need to use the big data in such a way that you can actually do it. So it has to be for the same period. So when we talk about value, we are asking for the value in that reporting period, which would be that quarter. So it would be for that 3 months. So if you get annual premium, for instance, and this is the same as what the insurers have also been doing, and this is what is actually very exciting about this return and great. And I think we are very excited about it, and maybe not you so much yet, but I know the insurers are, because they needed to get this data from you to be able to submit it to us on a quarterly basis. And now they know that the data integrity is going to be so much better because you have to do it for your own license now. And we know that it's going to be so much better because people are going to concentrate on these smaller nuances, because this type of question has always been there, for instance, in the insurance industry. But I also know that there's FSPs here that's not just in the insurance industry, but I'm just saying that's why we'll be excited. But it is for that quarterly period thing. So if you have an annual premium, that is not earned yet. That is, so you received it, but you only report on what you've earned. So what really came in and what you can use within your book for that period. So you'll bring it back into that quarter of the true value of your book for that quarter, because we also want to look at growth. So again, if we understand the reasons behind the questions, we want to look at your growth from one period to the next. We need to see the growth in terms of your products, your value of your products, and then your income stream. That's why the 3 questions are there together. You'll see on the conflict of interest all sheet, there's a question specifically about commission earned and commission paid. And that also refers to the entity itself. And some of these questions, and that's why this is so great, because it is like a storybook that is being told. You have to link up some of the indicators with other indicators, and that is how we will then check one compliance. So we would be able to see whether there's any possible contraventions of commission regulations, for instance. But we'll also be able to see maybe you make more of your money out of charges and fees, especially now we know that broker fees are being, advisor fees are being facilitated by insurers. We know in the investment world, there's big focus on advisor fees. We'll be able to see where do you actually get your income from, and then link it to the number of products that you sell and the value of that for that same period. And that's why we only work on quarterly periods. With Roy's question about implementation, we did allude to it in the roadmap that there might be a different implementation period for different sectors. The reason for this is because of the fact that we take proportionality into account, and we look at your data, your level of data maturity. So there might be a shorter period for implementation for the insurers. Again, I use them because they are the only sector, not just because I'm responsible for also supervising them and they're close to my heart, but because they are the only sector submitting currently. So what we're asking them now in the second level is questions we've been asking them in engagements for the last 3 years. So they knew it was coming, and they're already submitting, and they already built reports to submit on most of it. And now the finer refined questions are ones that we anyway ask them in the engagements. So they might just get a year for implementation, and then we would expect accurate reporting from them. Where for other industries like yourself, where you've not done this before, you would probably get the whole 2-year implementation period where we phase it in, and where our expectation would be different. And I think that is part of being more outcome-based, even in the way that we supervise, that we really be risk-focused, and we look at what is the industry, where is the industry, and make our supervision applicable to that industry. But yes, so it is for that specific period you need to bring it in. And I'm really excited because in one of the other workshops, I also said, you know, you're used to reporting things in a certain way, even when we look at complaints and how did you report on complaints and how did you measure turnaround times. And now we're moving this Titanic into a different direction, and we're really looking at fair outcomes. We're not just talking about it, we're looking at it, and we're having all of these indicators to actually show that to us. And because we're having all the sectors working together, it is going to be easier for everyone. But you guys are definitely like in the center, and we need you to understand what it is we're asking and why we're asking it this way, and work together on trying to get it practical, because you give information out to insurers. Some of you are insurers, some of you are banks. So we definitely need to be sure in these workshops you understand why we're asking something. Then you know where to go and get it in your books. Sorry, I can carry on for days. 3 hours might not be enough.
Thanks, Juanita. I see that we have Sorrel. So let's try and unmute Sorrel. If you can click on the mic, your mic is active from our side, so you should be able to participate. Okay, what I suggest, Sarel, is that you drop your hand. We're going to mute your mic again, and then if you could try again, and let's see, maybe it takes a second time. We do have the unexpected glitch here and there. Then we're going to move to Wilmar, who is our next guest. Wilmar, your mic is unmuted from our side. If you can just click on it, you should be able to participate. Wilmar? Okay, maybe it's because they waited so long to participate. Sarel, you are back, so let's try and see if you can participate. Okay, Sarel, it looks as if we're not going to be able to speak to you, but please do type your questions in the chat box, and then we'll do our best to address it like that. I see Wilmar is back, so let's see. Wilmar, try and unmute your mic. Okay, it looks as if sound has suddenly become a problem. So can I just check? Can everyone hear me? Could I just see some hands flagged? Okay, we've got Andrew back. Andrew, try and unmute.
Hi, Charene, it's Paul here again. It does take a while clicking the mic in the top right-hand side. I took a while to get through initially.
So people must just not give up. Thanks, Paul. Andrew, I see we've got you on mic as well. So let's just try. And then we're also going to give Chantel mic access. So I think the first one who manages to speak to us is the winner of the participation stakes. Andrew and Chantel, both of you have mic access from our side.
We open up that event.
Sorry, can I connect a bit later because I'm in another meeting as well.
Andrew, could you just repeat it, please? There was a little bit of echo.
Yeah, sorry, there's another meeting taking place here. Hang on, okay, it's over.
All right. So my question was again about the value. You know, I mean,
We're talking here about entities that differ quite a lot in size and complexity. You're talking about a life insurance company, you're talking about a single agent or a single broker who's got a contract to just sell one short-term policy or one short-term product, and you have everything in between. Now, we've got a practice doing roughly 5 million turnover, but is the turnover in any way linked to the value that you're looking for? I really don't understand what value the definition of the value. I really have absolutely no idea what you're looking for, because we do life, we do short term, we do medical, and all the commissions are paid in different ways. You talk about the product value. Well, Gap, we do 8 different Gap company products. Which one do you want? Do you want it collectively for Gap, or I really have no handle whatsoever on the value that you're looking for.
Thanks, Andrew. Juanita is ready to take that question.
Yes, thanks, Andrew. So I think like we mentioned previously, but you might have been busy with the other meeting, is we'll definitely look at giving this a better explanation in the terminology sheet. But the value that we want to see is the total value of your book. So yes, you'll have smaller ones. Yes, you'll have bigger ones. Yes, you'll have ones that sell 8 products and you'll have others that sell 3 products, and that's why we ask you about the number of your products and the value of your products, and then to break it down to us, where do you actually receive it from? And that is and a valuable point that you made, which we're also using the information for, is if you want to see outliers, you need to be able to peer entities together. So you need to do peer group reviews. We won't be able to do that if we can't see the size of this entity and the type of this entity versus putting it into a pool with other entities with similar sizes, similar type of entities, and then being able to see. Otherwise, you would never be able to flag an outlier. So that is why we do need to have these basic information that we're asking across the sectors and across the industries and across the entities to be able to do peer reviews and to be able to see whether you should be flagged or not. Did anything pick up? Do we need to discuss anything, or is there a movement in the industry that we're not aware of? So we'll look at trying to explain value for you better, but it is definitely, I think, the biggest confusion was from which point of view you're doing it, and you're doing it from your entity's point of view, and maybe even understanding that we're needing that to see how we're going to do our peer groupings. Maybe that even clarifies it even more for you, why we need this type of information. Thanks.
Thanks, Juanita. Chantal, we have you on mic, so please unmute and go ahead. Chantal, just try to click on the mic at the top of your screen. It looks as if the systems are a little bit slow in reacting this afternoon. So Chantal, when you have a chance, then just unmute and I will keep my eye on that. But I'm going to go back to the chat function and try and pick up. Okay, I see that Chantal is unable to unmute. Chantal, you'll then have to type your question for us, please. Let me just see. I think I've missed quite a lot of comments, and I have seen that our colleagues in the room have also been typing feedback back. So thank you so much for that. Craig, I'm going to pick up with a question from you. I think the questions earlier than that might have been addressed by now, but you say that the activity does not recognize the administrator prevalent within the non-life space, and they sit between the brokerage, NMI and UMA from a function perspective, and should be recognized hopefully within COFI as well. Craig, I was looking at the company information, and I think you are right. We don't have that specific kind of administration services listed. So please could you send that through as a formal comment so that we can include that in our discussions going forward. Thank you very much. Then Ricardo has a comment on the binder holders. In the event that a UMA has more than one binder agreement, the UMA reports to each insurer separately in the CBR format, and on the CBR template with the UMA then also submit their own separate CBR in duplication as well. And what about outsource agreements? So yes, if you have an FSP license and you are a UMA, then you would be reporting to us as well in your own capacity, because remember, when you are reporting to the insurer, they would then be including yours together with all the other UMAs that they have contracts with on their collated sheets. But we would then get information from you as a separate institution. Juanita, do you want to add anything to that? Okay, so
no, Charene, I think you answered it. And regarding the outsourcing agreements, again, that is, remember, for each entity submitting, we need to do your risk rating. And the more outsource agreements you have, the more oversight and monitoring you need as an entity. So that automatically means you as an entity have a higher risk in terms of having to do extra monitoring and extra regulating what is happening, because it's a reputational risk for you, what the outsource partners are doing. Having a binder is, again, you're the outsource partner for the insurer. So yes, they do submit it, but they submit it at a higher level. We're working towards where we'll have a better database where we can actually, with the binder notifications and terminations and the outsourcing notifications, build up to try and see entities like yourselves and see with who do you have agreements, what are you doing under these agreements for the different product providers, and what are you being paid, so that we can track it also on that level. And that would link back to what are you answering on the CBRs, because it should then be all the same. And that is why we need to have the periods all the same as well. But yes, it does feed back into your risk rating as an entity. So that's why it's not duplication. They're giving it at a higher level, you're giving it at your entity level.
Thank you, Juanita. Ronald, I see you have a comment about books of business, and I think it's a valid comment. We will include that in the comments that we look after when we are reviewing the comments and the Omni CBR. This might be something that you want to just include in your formal feedback to us as well. Sorry. Then Tufik, you've asked for a definition of funds to be included. Noted. Thank you very much. Then, okay, so there's quite a few requests. There's also a request for us to define business for clarity purposes. Noted. Thank you very much. Then, Billy, you are saying there's no single valuation method for multidisciplined financial services businesses. How do you value a life policy, for example? You cannot have a consistent value provided if you don't provide the valuation methodology. Okay, Billy, noted. We will take a look at that and see if we can come up with something that helps a little bit more around the valuation. Juanita would also like to come in here.
Yeah, so again, I would just like to reiterate the fact, and I know that Billy's comment was made 20 minutes ago, and we already had so many discussions about it, because we also answered Andrew's question about whether it's monthly, annual, sale. So remember, here we are just asking you about what it is that you got in as an entity in that quarter. We're not asking, so the insurers also, when they report to us, they don't report to us, if I can put it that way, because I'm looking at the different, how you're saying, across the different sectors. They don't report to us about the value of all the policies sold in terms of what is their liability. They're reporting to us in terms of what is the premium that they're receiving in that reporting period. And you should have been reporting to them about the policies that you sold and the premium that you received in that reporting period, because that tells us how big that entity is. It doesn't tell us how big the liability of the insurer is, but that is something that the PA asks for when they ask about how you're reserving, and they look at you from that risk perspective. In terms of investment providers, we also here ask about your book of value. So it will be that, and we had this session with them, it will be what they receive in terms of their fees and in terms of their charges, not in terms of their investments that they actually receive, because it's not their investments that they're working with. They're actually just dealing with it either as an asset manager or putting it into a portfolio, CIS portfolio, or hedge funds. We do ask on their business composition additional sheet, because it is a risk, and we do want to understand the risk for their industry specifically better about the assets under management. So we do look at it in those industries from those perspectives. In this, for the all sheet, we just want to know your entity. How much money did you get in this quarter, and where did you get it from? And how many products did you sell for this? What type of products it might be? I mean, we would love to ask it on product level. We would. If we had a wish list, we would go to that level. But because we have to keep proportionality in perspective here, I mean, if you guys give me the free rein, we can develop it to that level. That would be great for us. That would be so much more valuable. But then it's so much more work, and it's going to be a so much more detailed return. And that's why we're waiting for phase 2. And we're doing this, not phase 2 of the rollout plan, but phase 2 of asking for the next level of return. So this is why this is a higher level. This is to see how big you as an entity are. This is to see, because you'll see some of the other questions. And again, that's why I say again, you have to look at it as a storybook. Later on in this sheet, we ask you about how many representatives you have, how many branches do you have. We want to see how all of this links up to your size. We want to see, is there proper management, is there proper monitoring, is there proper oversight within your own entity? So you are answering this return from your business perspective, not about what's the value of the policy that you sold or the value of the investment that you got. And that's why we're asking it from all sides of the industry.
Juanita, thank you.
I hope that assists.
Thank you. No, it does. I think the answer is simply that we understand it now to be it's a question about revenue earned rather than valuation of a variety of different products where some of them still have an income stream coming in, some don't. And that was what was confusing. If it's a simple thing about explaining how much revenue you made and where you came from, then it's an understandable question that can be answered consistently. So that's 100%. Charene, I'm going to steal a question here while I'm on. And Juanita, just relating to the movement of money sheets. Look, I can understand why we're breaking the conduct of business up into who your client was, business or retail. But surely once you've got the money and it's once you got control about the money and the way you deal with the money and the way you move the money and the way you pay, it matters not who the client is. Why the differentiation? That's, I think, a fair question. Okay, thanks.
No, we love all questions because remember, again, we think it's clear from our side. So questions also challenge us to think about what was our thinking and did we get lost along the way of the 2-year process. So we love all questions. At least it means you're interested in what we're asking. So firstly, I love your first comment that it's now clear about the value, but we'll still take it into consideration because no one else asked it in the other workshops. So it may not have come up. And then the moment that they have to start completing it, that's when that's going to be an issue. So we have our legal guys also in the room and they're making a note of it because you can clearly see if I need to explain something, it might be quite more confusing. So then if we look at the all movement of money. So remember from a market conduct regulator perspective. So yes, we now you're an entity, you're safe. This is how much you've earned. This is how you do your oversight and your monitoring. This is the type of insurance you have in place because that's what we ask on the business composition all sheets. And we know that you can take care of yourself. And if you had to fall, there would be provisions for your customers. What, however, is important to us is how you deal with your customers. It's culture indicators. So you can tell us that, yes, you're customer-centric, but it doesn't mean that you are. And I do know, because I know what you're also going to say, not everything is in your control. You're working on behalf of insurers and other entities, yes. But that is why we need this reporting, because we're linking the dots together to see the bigger picture. We're asking the same thing from them as well. We want to know how long it takes for a request to come in and to be dealt with. We want to know, and yes, we're aware of the mistake there. Now that I look at it again, I must remember to say this, otherwise we'll get 10,000 comments telling us that we made a mistake in the numbering there. It's 11 to 15 days and then 16 to 30 days, not 116 to 30 days when we look at how you do your instructions. But we do need to see that whether it's a refund, whether it's a payment or a benefit that needs to be paid out. So a payment in terms of an investment or a benefit in terms of insurance or a refund because there was an overpayment, that do you treat it differently? Because the one, it's both the money of the client, but is it depending on the size of the payment that you would deal with it differently? Do you deal with certain age groups? And again, this was after we also consulted with the World Bank and we looked at what's happening in other jurisdictions and things that have gone wrong in our own jurisdiction. We know that some entities actually do look at how important a client is to them, the extra mile they would walk for a client. I mean, as a broker as well, if I only have one policy with you and it's not a big policy and you might have another client with so much more investments and policies with you, you might react quicker on a request of them, even if you're on holiday, than a request of mine. And that is why we need to track to be sure that you're treating all your customers the same, that the outcome to all the customers are the same, and not just from your perspective, even if you don't have control over everything, but also from the perspective of then the actual product provider. And that's why they also have to complete that. And again, it is for benchmarking exercises, and to really, it is an indicator of culture. And that is important. In terms of the second section on the movement of money, and yes, just to add to that, we do have the culture section on the governance sheet, but you'll see the culture section there is very straightforward type of questions, and the governance questions as well. It's almost like the catch-all sheet, where we couldn't track it through other indicators, through the return and through the story, to really see your culture, whether you treat everyone the same, whether you try and get your turnaround times down. Remember, that also shows efficiency of processes. And if we can't pick it up with the other indicators, we just needed to ask you some straightforward questions, and that's what you'll have on the governance sheet. And again, you'll see that you can't answer the cells in the way that it is now. Even on the company information cells, everything is not formatted correctly. We know that. And you'll see some of the questions on the governance sheet is really going to be yes or no type of answer questions. It's not even going to be numbers. On the money all sheet, the second section is about the collection of money, and we touched on it. I think it was the first question in this section in this workshop about how do you collect the money. There's a different risk from a market conduct perspective versus how you're collecting the money through other agencies where you keep that money versus are you collecting it directly yourself, and is it cash or is it debit orders or a stop order? Because to cancel, and you have to keep me honest here, but out of experience from interviews with different players in the industry, to cancel a stop order is much more difficult than to cancel a debit order, and it takes about on average 3 days longer, which does have an effect on the outcome to the customer. That type of things. So yes, I know then how big you are, to your point, Billy, and I know what you have and how the composition of your book is. Now we want to see how do you deal with your customers. And again, how you collect that money and keep that money is directly linked to your risk rating as an entity. I hope that answers the question.
Thank you, Juanita.
Yeah, thanks. I'm not, sorry, I just muted. I'm not going to answer the whole time. Thank you, Juanita.
Perfect, thanks. Martha, you've been very patient, but please do go ahead.
Grateful for raising it for so long. Okay, I just wanted to say I saw a number of questions around the asset managers sheet and the list and administrators. So I'd like to clarify to the attendees that we actually picked up during the workshop on Monday that there's a confusion around the administrators and the list. And we explained to them that when you go to the asset managers sheet, we actually, when we refer to administrators, we're looking at investment administrators like your Curos, your Maitland, and Silica. And there's a separate tab for a list. So there's also a comment around having a separate sheet. So what we're going to do, as we discussed as the FSCA, is that we're actually going to rename the sheet of asset managers, because I think that's where the name is confusing, to think that it's supposed to be only asset managers. But when we develop this sheet, we base it on the fact that it's how we are structured within the FSCA. We are part of investment providers, and we're responsible for sort of the asset managers for the Cat 3s, for the Cat 2A, and the Cat 1 investment providers. So we're going to look at that sheet and rename it probably to indicate it as Cat 1 investment administrators, your Cat 2s, Cat 2As, and Cat 3s. Then it will be easier for each license category fits in when they complete the Omni CBR.
Thank you very much, Martha. That's a very useful explanation. We promised a break at about 3 o'clock. We've been going just under an hour and a half, and I think that everyone needs a break right now. There were a couple of questions that I just saw now going through the chat as to how you can participate. So as you've seen, we've had a couple of challenges with getting people to participate, but technically what you should be able to do is literally just go to the reactions tab at the top of the page, raise your hand, and we will then unmute your mic from our side. You will then see that your mic changes color, and from being sort of dark and blacked out, it will show that it's just crossed through and be white. And if you then click on it, then you should be able to speak when we give you an opportunity to speak. So let's give you a 10-minute break, and that will give us a chance to just look at all the questions that we haven't answered yet. And then we'll start with the unanswered questions or comments after the break. So my clock says it's 4 minutes past 3. So let's round it off and come back at 15 minutes past 3. So 3:15, we will be back. Thank you very much. And we're back. So I hope that you've all had a chance to stretch your legs, grab something to drink, maybe had a donut or something else to just give you some energy for this afternoon. And as you will see, both Juanita and I have divested ourselves of our jackets because the room that we are in is incredibly warm, which is really nice because it's been cold in Pretoria. But we hope that you don't mind that we are now just going to be a little bit more informal. So there were quite a few questions around definitions. We acknowledge that, we will be dealing with that, but we're not going to be dealing with the definition questions per se now. We have a colleague from our legal frameworks department with us, Johan van der List, and there were some questions about frameworks and the framework that gives position to this as well as RDR. So Johan, could I perhaps ask you to just kick off this second half of this afternoon with a little bit of an explanation on that?
Hello, Charene. Sorry, I just waited for the mic to be able to unmute. Hello, everyone. Yes, so from a regulatory frameworks point of view, if we look at powers in respect of the CBRs, there's various pieces of legislation that give us powers in the different financial sector laws, and then there's also, of course, in the overarching Financial Sector Regulation Act, there's powers to prescribe returns, but currently the CBR is not prescribed, and as you know, it's just a template, and there's various big projects on the way, like the COFI bill, and depending on finalization of those projects, the way of prescribing the CBR returns will be dependent on those projects. Charene, if you can just point me to the question, if there's any particular aspects that I have to address.
So, Johan, one of the questions was if there's any timelines around the RDR implementation. So I think if you could just talk a little bit about where we are with RDR. I'm not sure how much information you have about that at this stage, but if you do have some and could share it, that would be useful.
I think, look, a lot of the developments are currently depending on harmonizing work that we're doing in the requirements across the financial sector law, and also streamlining and consolidating requirements as far as possible. So those projects are busy being undertaken, and during those projects, there's also then a future focus on some of those aspects, how that can be incorporated. But currently, for instance, if you look at the policyholder protection rules and the regulations under that, which is also part of some of the RDR proposals, those are just at this moment not going ahead as is because of these transitioning and steps towards the COFI bill. So I think as we go along, there would be further clarity on in what form the RDR proposals will be introduced or going forward, but I don't have definitive answers on timeline at the moment, considering the harmonization work.
Thank you very much, Johan. Then if we go back to questions, then there's quite a few of you who seem to be wanting to volunteer to participate in our pilot phase, which is scheduled for next year. So the way that you could volunteer to participate is you could send an email either to Juanita, you have her email address on the invitation, or those of you who know how to get hold of me, you're most welcome to send it to me as well, and we will collate it and we will then keep a list. Please bear in mind that we will acknowledge your willingness to participate in the pilot phase, but we're not going to kickstart that before we have all the comments. So the pilot phase is only going to take place next year, but we would definitely be very interested in seeing who of you would want to participate. And I always think it's a nice way to just get your systems up and running and make sure that you are ready for the implementation. So if you look at the timeline, this year is the year for comment and participation on the proposed questions. Next year, we're going to be piloting, and then the year thereafter, and that is 2024. Let me do some maths in my head quickly. That's where we're going to start with the first part of the implementation phase, and it's going to be a 2-year phased-in implementation. So that just gives you a little bit of timelines again. Craig, I see your comments around the data request and the duplication. We don't think that it will be duplication, but if you are concerned about it, please do make that part of your comments as well. And we will double check from our side that we don't have duplication, because we don't want to double count and then have inaccurate statistics. Sibusiso, you have a question on the BC Retail All tab. So that's the business composition tab. On question 1.3, the distinction between fees and charges. Sorry, let me just get that as well. Juanita, do you want to go ahead?
Yes, thanks, Charene. So the fees we're referring to would be like advisor fees that you would be receiving, and we actually have a breakdown for different types of fees. I just want to be sure, I think it's on the movement of money sheet that or it's on the conflict of interest. When I look at this, let me just have a look. Then we break down all types of fees. Yes, it's on the conflict of interest, the all conflict of interest sheet. You'll see there's 2.3, question 2.3, where we break down all types of fees that you can have, that you can get an income from. And that's why I say things do link up together. So those are the fees that we have in mind, and we have explanations for those fees. The terminology is there. And then charges would be more where what we've realized is there's a lot of FSPs that also do additional services, and that they have charges for the additional services, whether it's loyalty programs that they're running separate from the product provider, whether it is other financial services that they're offering to the customer, which is maybe not linked necessarily to insurance or to investments. It could even be something like providing them with roadside assistance, those type of things. Those are the extra charges that you'll be charging and getting an income from. But if you want to see what fees are and what we mean by fees, I think the easiest way would be how we broke it down on the conflict of interest sheet.
Thank you, Juanita. Sibusiso, you also have a question on the same sheet on questions 1.13 and 1.14, and specifically the use of the word audited there. If I look at the questions, then audited here, if you wanted, you could replace it by monitored or reviewed. So it's really those in question 1.13, the number of records of advice that were audited, and then in 1.14, the number of sales calls. So obviously you would deal with it depending on how your business is structured, but it's what did you review, what did you check? So an easy way to change it is what did you check? Because we know that you don't check everything. Most businesses take a sample, so it's really your sample size. Sorry, I just clicked on the wrong thing. Let me carry on. I see that my colleague Dimakatsa did answer Sunita, so I hope that is fine. And Manasi also responded. Then Ronald, you asked, an FSP cannot choose category 1 and category 2. Does this mean that you have to complete 2 reports if you are both a category 1 and 2 FSP? Ideally, no. So that would be one of the things that we would be testing once we get to the implementation of the spreadsheet itself. So we do acknowledge that at this stage, there is some functionality that isn't able yet. But the ideal is that you would answer for every category that you have on your license as an FSP. So if you are an FSP and you have category 1 and category 4, you'd be able to answer both. If you are category 1 and 2 FSPs, or category 1 and a 3 FSP, whatever the permutation is that you have, that as one licensed entity, you can answer all the questions that relate to your specific licensing categories. So that is a practical thing that we will be addressing. I think I've dealt with all of the questions around the trial phase. Then Russell, you asked, can we align the sheets with the COFI license categories? So Juanita is going to come in on that, I think, but let me give a stab at it. We would like to move there in the future, but right now it isn't active yet. So it is catered for in our level 3 questions, but it's not the only thing that we can look at. But Juanita, please correct me.
Yeah, Charene. So when we actually started with the development of the Omni CBR, obviously we don't want to do one thing now, 4 years from now, do a drastic change. I've also noted the comments regarding, do we know what the cost of compliance is and what this will cost? And we're actually very aware of it because it's going to cost us a lot too. I mean, you can imagine getting in 14,000 returns. But we do know that it is a big cost, even on especially on smaller entities. So we are not going to be that volatile to change things every 4 years. So that's why we brought in, like Charene said, the question about the activities and what you're being licensed for. So what would in all probability happen is when COFI comes in and it's finalized and the activities and you're being licensed under activities, the headings might change to be more aligned with that. But the indicators, your market conduct indicators won't change in terms of now, because you're not under your sector's regulations, you're now under COFI, therefore all of a sudden the market conduct indicators are different. It might just be that when you customize, you'll customize a little bit differently with other headings now. What we do have to keep in mind, however, is that this is a living document. So after it comes into full and final complete reporting in 4 years from now, it will be reviewed on an annual basis. I mean, logically, that would just make sense because industry change, risks change, customers change, products and services change. So we have to stay with the market and make the changes that is needed to actually capture the right risk and monitor the right risks. And that's also why I want to say that one of the things we've also been struggling a lot with the returns in the past and that we have to be clear about here is when you say other at any place in this return, there's a comments block at the foot of each tab. And you have to explain what other is. So if you choose other under distribution channels, your distribution channel doesn't fall into any of that. You need to tell us what that other is because we're tracking it over time. And if this is growing, like what we saw now, that after COVID, the growth in trying to use mobile applications and USSD to sell and robo-advice to sell products was growing much more than expected, and we needed to start tracking that more individually. Then we make the little changes like that so it can be more relevant. Because this is a return at the end of the day when you look at it and when you look at it again now after today's session and you look at it from, I'm answering it from my business perspective, then you'll start seeing the value we wanted to add to your business, your bottom line, and also to the gaps. You could be able to identify gaps not only in your data and in your compliance, but gaps in terms of, is there a part of the market that you could actually be accessing and you haven't realized it because now you see the whole picture? Or is there gaps in your monitoring that's making you vulnerable as an entity that you need to address and that you don't have enough controls in place for? So to keep that in mind, so it won't change drastically, but yes, we're trying to keep the market conduct indicators there. It might just be some headings that will change.
Thank you, Juanita. The next question is from Tarusha, who's asking whether there are guidelines to calculate how much PI cover the FSP should have. That's a very good question. But we don't have guidelines because what we do prescribe is the minimum depending on the activities of the business. And we prescribed that in Board Notice 123 of 2009. And we still have 1 million rand as the minimum cover depending on what your license categories are. And the reason why we haven't amended the minimum is because if you only cover yourself for the minimum, you're probably doing your business a disservice. You need to work with a specialist in calculating PI cover or fidelity insurance, depending on, or both, or depending on what your FSP needs, or suitable guarantees if you opted to go that route, because that's the 3 different requirements that we cater for in that board notice. And it depends on the business that you do in your environment. So if your business regularly writes cover for 100 million rand, but you only have 1 million rand PI cover, then there's a huge discordance between it, and you need to address that. And that's where not every FSP is an expert on calculating this, and I would then definitely advise that you call in the assistance of another FSP that is a specialist in calculating this, looking at what your exposure is, what your potential risk is when you do face a claim against your business, because that's what this is all about, and the extent to which you would be able to deal with that. Unfortunately, that I think is the best that we can do as a regulator from an advice perspective, but do get in some expert advice on this. Then Tufik is asking, I have a category 1 FSP that is a binder holder for an insurer. Would the assets under management, etc., need to be reported by the insurer or by the category 1? Tufik, I think we've dealt with this question, maybe in a slightly different format, but this is the question about your specific entity. So you would be reporting in statistics to the insurer if you have a contract with an insurer, and they would be collating that as part of their overall reporting. But here we are looking at your FSP as a solo entity. So what does your entity look like, and what does your assets under management look like? And Juanita's also talked about trend analysis and pattern analysis and grouping peers with peers. So it's that whole apples with apples and not apples with pears. So we might, because we have incorrect or outdated information about you, see you as in the same space as another FSP, but actually when we start unpacking it, we cannot draw a trend analysis and do predictions on this, because this also talks about focusing regulatory attention. Is there something in the market that really needs a lot of support and assistance from us, or maybe even investigation, because there could be something that is not happening in the way that it should be happening, and we need that information so that we can see where regulatory attention should go to. Darusha, back to a question from you, and you say where the FSP is small, the sole proprietor does not have a compliance officer and submit returns herself. Is there a cutoff amount for the revenue earned where an FSP is not compelled to have a compliance officer? Darusha, it's not about revenue. So you could have a sole proprietor FSP who has quite a lot of revenue, who is from a financial perspective, a very big player in the market, but it's still just a sole proprietor. That sole proprietor is legally allowed to function without a compliance officer. The requirement in law is about the number of people in regulated roles within the FSP. So the moment there is more than one person in a regulated role in an FSP, then the FSP must appoint a compliance officer. But when it is a typical sole proprietor, one person fulfilling all the regulated roles in the entity, the FSP then has the choice to appoint a compliance officer or not to appoint a compliance officer. So to unpack that a little bit further, I'm the sole proprietor. I don't employ anyone. I'm both my own representative and my own key individual as a sole proprietor. I'm my own boss. I don't have to appoint a compliance officer. The moment Juanita joins me in my business and she becomes a representative of my business, I now don't have a choice. I'm not a sole proprietor anymore in the sense that I'm the only person in the business, even if I'm still the sole owner of the business. I've employed another person in a regulated position. Now I have to appoint a compliance officer. I hope that helps you. But if you're not sure, you're more than welcome to contact us. And I see that Alma has also given you the link to a newsletter. Thank you very much. Craig, you ask, have the suppliers of IT systems to the industry, for instance, TL, on the non-life side, that will likely be relied upon to support FSPs with collating data for the returns and will need to implement changes to follow to allow capturing, being approached by the FSCA? Juanita, it looks like you're ready to take that question.
Thanks, Charene. So the short answer is no. The longer answer is we have been approached by service providers that are currently assisting entities, well, specifically insurers, was trying to collate information for them for the returns, and that have been made aware that the Omni CBR is coming, and that also have other types of clients, which I'm sure also includes some of you in this room. And they were aware, and some of them are attending the workshops also. We have some of them attending all the workshops to really understand what is being asked from each sector and to assist with collating that information. Regarding the service providers for the IT systems, No, because we don't know at which system you're using, at which level you're using. We know there are various systems being used by various sectors. We know that they can be used up to a certain level depending on your license and what you need from them. So this will be something that will be driven by the industry as they have their different needs and their discussions. We are more than welcome to meet with any of the providers, any of the IT system providers, the same as what we did with the other service providers that wanted to understand what is coming and how they could assist their clients. Also take them through this, also to a question that was raised earlier about having to help the smaller entities. This is a process. This is something that this is a journey that we're going to go on together. So we have in the roadmap invited entities to say that if you need to meet with us personally and have a discussion or virtually and have a discussion before you give in your comments, which is due on 10 August, you're more than welcome to do so, even if it's an industry body to maybe represent people, so that we all on the same page. Like I said, it's much better talking through these things than having to read comments and trying to understand what someone is saying. There could be so many, we even saw today in the session, things that you misunderstand there. So we're more than willing to have those meetings. And then remember also, this is not a once-off. Phase 2, when it comes to the practicality and the cost and the time it will take to implement it when we have a final Omni CBR, which starts next year, will also give an indication of implementation period and of the costs and the efforts that need to be involved. Although, like I said in some of the other workshops, you know, certain of these things we've always asked you. We will always ask you them because they're strong indicators for us. So you can start building and getting your systems ready. And that's even why we gave the XML codes already, to get that information. So questions, the formatting might change, questions might add, some might leave, depending on the comments we get. But some of them, you know, that is what we've always asked, and that's what we will be asking. So some building can already start now. But in that process, what I wanted to say is, you'll have engagements with your various sectors and with the frontline teams of the various sectors, and they will give you feedback on your submissions, and they will be there to guide you in more detail about your specific sector and try and give you assistance in terms of what it is that we expect in this return. This is definitely not just like a once-off workshop. And then I also saw the comment that one of my colleagues made about having to go and look at the webinars, because we really also did a lot of effort. I think you can binge watch on it and it'll take you just over 3 hours to go through all of them. But then you'll have a better idea of what is our expectation and our thinking behind it. And that's what's important, is that you know that this wasn't something we just sucked out of our thumbs or thought of in 1 month and put together and sent out to industry. There wasn't really a lot of thought going into this. Thanks.
Thank you, Juanita. As you can see, I'm trying to go down the questions in the time format. So I'm at 15:26 now, for those of you who are trying to catch up where I am. And there's a question from Audrey Viljoen on the All BC Retail page, questions 2.5 and 2.6, which has to do with the number of instructions. So I think, Audrey, if you look at the questions and the breakdown in 2.4, so on 2.4, there is a breakdown of 9 subtypes of instructions. So if you read 2.5 and 2.6 in the context of the breakdown in 2.4, that is probably going to answer your question. And the breakdown has to do with cancellations, lapses, etc. So it's not necessarily the instruction just to change the address, but it's a more in-depth instruction, for want of a better word. Then, sorry, let me just go down. Thank you, Russell. You'll happily receive your written comments. Then Greta asks, can you please shed some light on why certain matters, such as adherence to fit and proper requirements, have not been included in the report? And I think I'm going to echo what Juanita said earlier. We would love to be incredibly comprehensive with our report questions. If you look at this, there's already a lot of sheets and a lot of information that FSPs have to answer us. So we decided from a supervisory perspective, what is phase 1? And that's the questions that you're looking at now. So phase 1 from a questioning perspective. So the questions that you're seeing in the sheet, if you play around with it and you put in different details and you customize it, you get a very good sense of how detailed these questions are. There's a lot of all sheets that apply to every single entity, regardless of what kind of license you have. And then there are the business specific questions that only apply to specific types of licenses. If you add all of this, it's a lot of questions, it's a lot of tabs, some more, some less. And Juanita would like to come in here. But some of the questions that we would like to ask is probably only going to come in at a later stage. You also can't overwhelm you and us by asking everything we want to know. We had to make a decision as an overall business as well. What are the initial questions that we're going to find incredibly helpful? Not that the others aren't, but we also had to cut and say, okay, you know, I wish this is becoming like one of those online shopping lists where you have more wishes than money. We probably have the same kind of thing here. So, Juanita?
Yeah, I couldn't agree more, Charene. And I have a shopping list like that, a wish list, where I have more things on than money that I have. But the other thing is also we try to keep the questions here very much quantitative, just because of the frequency of it. And so that we're able to actually genuinely analyze the information that comes in and be able to do something with it. And this relates to a question that I see Siposiso asked at 32 minutes past 3, just a little bit lower down. We are thinking of there would be, in all probability, an annual return. And the annual return will be more qualitative in nature, and that would maybe touch more on the fit and proper questions, and that will ask for documents to be uploaded. But that won't happen until we're not in full reporting of this return. When this return is settled in, and we are all comfortable that we all have the same understanding and we have full and complete reporting and it's accurate on this, and we can start doing our benchmarking and giving feedback, then we move on to looking at an annual report. And there will also be more governance questions in that report. And there you will be uploading documents. But we also need the right programs at the FSCA to be able to analyze that faster and give feedback on that. And there's just too many of those type of reports and documents that will come in, and we don't have the capacity to do anything with it right now. So we don't want, that just shows you now, again, we don't want to ask for anything that we can't use. We're asking for everything that we know we can use and can deal with at this stage.
Thanks, Juanita. And then we have a question from Billy. Billy, you did say that you were going to ask us a lot of questions, and you weren't lying when you said that. On the business composition retail all sheet on question 1.4 and the age grouping. So Billy, yes, it would be at the time of reporting what is the age grouping. And yes, we do expect you to give us an idea, because that gives us an idea about financial inclusion as well. Remember, we want to also track how many people in the broader population base of South Africa is being serviced in one or another way, and where are the gaps? Are there specific age groups where there are gaps in providing financial services of some kind to them? Juanita also would like to come in here.
Charene, you can finish first and then I'll come in. But what I wanted to say is I'm expecting the next question would be, why do we need it on a quarterly basis? Because your book doesn't change of age on a quarterly basis that much. I'm just expecting that question. And the reason why we want it on a quarterly basis is if you have a certain campaign, or your product provider has a certain campaign and they're targeting a certain part of your target market, or even outside of your target market who you didn't usually sell to, and now all of a sudden you are selling to them, then we can pick it up from quarter to quarter. And then we can be more proactive in our engagements with you to try and understand what was this campaign about, or what is this new product about. In our engagements with the product providers, whether it's an insurer or a bank or any of the investment providers, we do ask about, do you plan about new products? Tell us about it. Remember, they don't accept if it is a micro insurer. In terms of Rule 2A, have to submit new products to us. And in terms and the funeral products and traditional insurers. So we don't approve products. We do know about portfolios and portfolios and new hedge funds. So I'm not talking about what we're licensing, but in terms of the products that we're doing, then we can see if your strategy has changed, if there's a certain focus that goes on, if something new came into the market, and we can engage more meaningful on that. So the idea is also later on that it's not just a normal engagement, we have to do it. It's almost like a tick box exercise and you have your normal agenda, but that we really start focusing just on what is the information that we got from you and what do we want to understand better about your business. And that's why it's on a quarterly basis. Thanks.
Thank you, Juanita. And I think you must just stay where you are, because the next question is around the quantitative and the qualitative questions. So do we have an idea of what would likely be asked in the qualitative or the annual report?
So we do, because we had to take them out of this report when we were sitting together and working out what the risks of each sector, and we came up with what we want to identify and then see which questions could we work into quantitative questions and which ones we had to put on the back burner because they're qualitative questions and we can't ask it, or the volatility of it is just not of such a nature that we need to ask it on a quarterly basis. We put it on the back burner. But we didn't focus much on it because this was already a mammoth task. So I can't tell you specific questions that we would be asking there, but it'll be closer to what you had in your compliance reports, because the type of documents I remember the compliance teams were pushing for to have in there was a lot that you were currently submitting. But it will also, by the time we get there and we're reviewing it, we need to review it with a fresh eye. Because I remember when I was a compliance officer and I had to upload documents for the compliance report, the answer of business was just upload what we uploaded last year. Nothing changed, it's all the same. So we have to be careful of that and whether that's really giving us what we need as a market conduct regulator, and what is the risk we're looking at, so that we don't just upload a lot of documents and that type of thing. And yes, there's some questions here that's yes and no, but that we're able to analyze and pull in through the reports. Those will be more descriptive type of questions. But now I can't tell you what type of questions yet, and it's really very far off in the future.
Yeah, Anita, and that was to the earlier question as well from, I think, Greta's. I know that we had some fit and proper type of questions that would probably fit in better from a qualitative perspective and on an annual basis than necessarily on a quarterly basis. But as you've said, we had a long wish list and we'll revisit that before we publish that. Christopher, I see your comment just on Billy's question where you think that we will have gaps, especially when young adults are still on parents' policies. And that's true. But at least if we can get a sense of how many of them have policies in their own right, it will start giving us a benchmark for, which age groups are catered for, what are they being catered for, and it will give us more information at a slightly more granular level than what we have at this stage. So it's a good starting point, but we acknowledge there will be gaps. Ronald, you have a question about the all movement of money retail sheet, but I'm sorry, I'm not understanding exactly what your question is. So do you want to perhaps raise your hand and we can give you a chance to just chat to us about your question? Thanks. Ronald, you can go ahead.
Thank you, Charene. The question was just that state the number of payments other than refunds made to customers in the reporting period. So it is clear that that would also refer to monthly income that you're paying out of, let's say, your ILAs. But the problem is when you're working with monthly payments from ILAs for clients, then the rest of question 1.5 and 1.6 becomes a little bit difficult to answer. So it was just basically highlighting that I do not think that, or I'm questioning whether this is actually including automated monthly income payments that comes from a person's investment.
Sorry, just had a problem with my mic there. Thank you very much, Ronald. Juanita?
Okay, thank you for that point, Ronald. So if we look at some of the terminology that we put next to that question, you'll see one of them is payments, and we say that a payment is due to a financial customer when it is whether contractually due in respect of benefits claims or interest earned, but it just excludes the refunds. So recurring payments are in fact payments that we want included there. It's only refunds that we took out. Then the question about whether it's made partially or fully, I would argue that it is still relevant. And maybe this is one of the things that you could better explain to me as to when it won't be, because even if it is a recurring payment, let's say on an income disability, that payment can still be made in full for 2 months, and then in the middle of the next month, I do start working again, and it's not a full payment that's being made to me by the insurer, and therefore it is a partial payment. So it will fall into one partial, because you have 3 payments. When it's recurring, it will count as 3 payments. 2 will be full, and 1 will be a partial payment. If I have to take the example that you just used now on investments, for instance, there it would be, we would refer to the partial surrenders, full surrenders, and those type of payments being made. In terms of banks, I'm trying to think if there are some, when we talk of partial payments, when it comes to banks, it would be because there's a lot of costs that are deducted from it, or outstanding bank costs and outstanding interest and things that they could deduct, and it isn't your full amount that was actually in your account that was paid out. So I would argue that in most instances, I actually can't see how you can't make it fit in, but again, you're closer to the industry and to business. So if you want to expand.
If you look at a pension, ILA, investment-linked living annuity, you can make a payment from 2.5% to 17.5%. I'm paying out 5%. Is that a full payment or is that a partial payment because the client asked for 5% and I'm paying him 5%?
No, but then it's a, sorry.
No, so would that qualify as a full payment? And then if I'm paying that every 30 days, am I going to fill that in under 1.6 as 16 to 30 days in 1.6.5, or where if I'm paying it every 30 days, or what is the purpose of 1.6 in that regard then?
Okay, so in terms of that type of recurring payment, if you choose as 5% and you're paying out the full 5%, you're making a full payment. It's not a partial payment. So I can see how on retirement funds it could be that all of them would be full payments depending on what they choose, as long as what is being paid out is what they chose. It's a full payment that you would count. The number of payments made in that period when we get to 1.6 is about how quick is the turnaround time. So if the payment is due on, you're paying it out every 30 days, but it is due on the 1st of the month, and when the first falls over a weekend or there's a public holiday or one other reason like that, but you still pay it out within the 2 days that it's supposed to be paid out, it counts in 0 to 2 days. I wouldn't let it count in the 30 days, just coming from the thinking, it doesn't take you 30 days to process that request. You're actually automatically processing the request and making the payment as you should be making it. It's only when there's system downtime or there is one or other delay on your side that would move to a lower type of turnaround period. Would that make sense?
Thank you very much.
Okay. Is that then also answering question 1.6 for you?
That's fine. Thank you. Both was answered.
Right. Thanks.
Thank you. Then we have a question from Paul, who's asking about the selection of the age groups and why is 55 and 65 not selected as normal retirement ages? Also, the amounts used for the business breakdown. All the age groups were the result of a lot of discussion internally because we all work with industries and industry tend to have different age groupings. So we selected these ones, and now I'm looking at them. We selected 0 to 18, then 19 to 35, 36 to 45, 46 to 62, and then 63 up as being fairly representative of the major age groupings. And obviously any industry, any business could say to us that they prefer a different one, but we felt that these probably cut across quite a lot of the industry groupings and would give us a very good representation Juanita, would you like to expand on that?
I would almost want to say which one of the sectors they need to blame for this breakdown, the way that it is. But I'm joking. No, it's like Charene said, we actually had workshopped this age groupings in quite a lot of detail. And why we didn't group them from 55 and up is we were worried that most of the pensioners would then fall into that grouping. Like you're saying, the normal retirement ages. And yet a lot of people continue working longer than that. There is people that take early retirement ages. Then because we want to make the assumption that you would need certain products at certain stages in your life, we didn't want to have one big grouping at the end, and we wouldn't be able to truly track that in terms of appropriateness. And that's why we broke it down. So we actually just put in an additional level so that we could be more sure that we don't just track the guys that are on retirement, especially when it also comes to the investment part.
Thank you, Anita. We have a question from Suzette, and this talks specifically about the technology and resources that we have. So do we have specific technology and resources to analyze the information? And then how will FSPs receive feedback, or will it be more aggregated feedback or used internally? So I'm going to ask you, Anita, to talk about the technology because she's very involved in the development and the driving of that part of the project.
Oh, thank you, Charene. I don't know if we should say that. If it fails, everyone's going to know that I was involved with that. So yes, we've actually done a lot of work with the technology. We actually created a whole new department based on the information that we got back from the CBRs, and because of capacity constraints, and because we saw how much work we needed to do with the data and really analyzing the data. So we have a data analysis team that's actually broken up into two. We have an IT team that works with data analysis, and they're building the dashboards for us and working with the database where the information is coming in and making sure that it's all captured correctly and that we can pull reports from there. Then we have the second part of the team that actually helps us more with the actual trend analysis. And then when we're getting in more of these returns, they are also going to be the team that will help us to aggregate it more and have it into a way that we can actually on an aggregated basis present it to industry. Feedback initially will not be anything that we publish because it is a liability for us. We need to be sure that the data that we have is true and complete, even on an aggregated level, before we start saying there's a trend here or this product seems problematic, or we want to, just make people aware of our expectations with certain products. So we wouldn't be that reckless with this type of data. We understand the responsibility that comes with this amount of data and what you do with it. So there will also be some level of consultation before we even start on the reporting of the aggregated data, or some indication to industry. This is when we're going to start doing it, and these are the indicators that, because it will be particular indicators that we're reporting on. In terms of resources, I don't think there's one company in the country that can say they have enough resources, and we are no exception. I think we will always need, is also on the wish list, more resources so that we can do so much more with the data. But like, again, this is not something that came overnight. We're working on it. We've been working on it for the last 2 years when these departments were established, and we're building the reports, and we're going to keep on working it while this rolls out, and also then try and get our capacity to the right level. Thanks.
Thank you, Anita. Paul, you can go ahead and ask your question.
Thanks very much, Charene. Just getting back to, thanks for the answering about ages. I think they are a bit strange, but be that as it may. On the company sheet where you have the annual revenue, it seems very sort of limited in the brackets going 0 to 2, 2 to 5, 5 to 10, and then above 10. In our inflationary environment, I would have thought that you needed another one, or going up to 50 million and above. So I wasn't sure about that. And then Just in terms of that business composition, you clarified for me that whole aspect about the value of your book. And it seemed to be that we're looking at effectively what was the fees earned in that quarter, if we're reporting quarterly. And then we look at number of customers or members in your book of business. Are we now looking at my entire book of business, or are we looking at the new business that I would have written in that quarter? And are you going to be asking for both?
Okay, so if I can take a stab at that. So the breakdown of the revenue clause is the same as with the age clauses. Is after workshopping it, what we thought would be appropriate. So I gave the explanation of what we thought of the age clauses. When it came to the revenue or the fund value, it was also to cater for what we believe would indicate then to us the more vulnerable entities, because we didn't want to go with anything like sole proprietor and company or something like that, because it wouldn't indicate vulnerabilities to us. In terms of values, remember, we're very open. This is a consultative process. If you're saying there should actually be another category in there, we would be able to track the risks from a market conduct perspective better if we have another category in there, then please do suggest that in the comments so that we can look at it, because we could have missed it. You're closer to the industry than we are. I say that again. So that is valuable information to have and for us to consider very valuable. In terms of, I was now thinking about the new products. So you'll see in 1.6, we ask about the new products. Then so the first questions is about your current book of business in total with new and old, but what you have for that quarter, this is your value. And then we ask you how much of that value is just based on the new products that or services. And which distribution channels were used for it. So then the next few questions only concentrate on the new business that you brought in that quarter. Again, to look at growth of book, again, to look at if there was a spike, why was there a spike? Do we understand the movement in the market? Do we understand your strategy? Do we understand the strategy of the group? Is this all aligned or not? So we do differentiate them. Thanks.
Thank you, Billy. You've got your hand raised. You can go ahead.
Thanks. I'm not going to, people are getting tired of me, but I just want to ask something about the feedback process. I mean, we've looked at the portal and we've seen how you can make comments, and it makes sense that you're dealing with it question per question. My concern is that following this process, there's no procedure or a way to deal with representative comments. So, for example, I make a comment on behalf of the whole of Moonstone Compliance, so it's one comment. So you're seeing it as one comment. But, I mean, if I look at the constituency that we're representing, it's a large amount of people. Similarly, so let's, for example, just say myself and Marsted, just as without their permission to mention them in this, make a comment about one point. If you're looking at the FSP segment that we're talking about, we might represent 30% of the constituency that's raising that point, but you're seeing it as two comments, which is a problem in this, I don't know how we're going to get past that in this comment submission format, as opposed to normally where you can position, okay, this is where you're representing, this is the amount of people that you're looking at. So I'm just concerned, for example, I mean, how does the FIA, for example, now go? Because it's also one comment. I mean, how does the industry body or a representative organization, such as a compliance practice, which has a lot of customers, and also possibly, I mean, there's 50 people, just CEOs in Moonstone, is going to be one comment. How is that going to be dealt with? How do you see that as a status or being representative of not just one view, but a larger view about a problem? Okay, that's the question. Thanks.
So, Charene, did you want to take a stab at it, or should I?
I think you can go ahead.
Okay, so one thing, I do think you need to give us credit that we do know who is who in the sectors that we work with and how big different industry bodies or different institutions represent in the industry. And that's also why we wanted you to register for these sessions and why we're putting attendance records is also to make sure that when a comment comes in, is it a comment that we dealt with before, or is it a comment that is a new comment, so that we can see it from that point of view. But in terms of, this is also us treating everyone fairly. We need to take every comment seriously. And we need to consider every comment, whether it's made by one entity that feels that strongly about it, or came to see us and had that discussion with us and then submitted the comment, or whether it's from you, Billy, from Moonstone, who represents a bigger part of the industry. We have to consider each and every comment that we get. We will engage even after we get the comments if we don't understand something, before we comment on your comment, because when we make the changes, we do publish the comment matrix to show you what changed and why did it change, so that we can follow the thinking behind that. And I mean, that's the product of the consultative process. But from our point of view, especially because there's also a lot of smaller entities, and in the other sectors, there's also smaller entities that are not part of industry bodies. We have to give everyone an opportunity to give that comment and to consider that comment. I take note of what you're trying to say about how big of the industry are you representing. Whether it's one comment from Moonstone or 30 comments from Moonstone, we know who Moonstone is, and we know how you represent the industry. So you have to give us just a little bit of credit as well. But like I said, every comment is important. What you should be saying is you love the new way of commenting, because now you know we can automatically start drawing from that, because it comes into a database and we can give it out to the different sectors, and they're able to actually look at the comments relevant to their sheets on their own and analyze it. And we can do this in a concurrent process to make the whole comment process a little bit faster than what, well, that's what we're aiming for. This is the first time we're doing it this way, but we're hoping to do that in future with any of the information requests or returns, for all of them to be, on the web, so that we can do it that way, and that it will be a faster turnaround time to give you better customer service. But what I also wanted to say is, you can have more than one person registered per entity to give comments, especially for the bigger groups. So that's the way it's set up on the portal, is you can actually have people, as long as they are users that we've already accepted with any one of the sectors, to submit something on behalf of your entity. Otherwise, you'll need to contact us with a letter from the CEO saying that this person is allowed to represent on behalf of that entity, because certain parts of the return falls into certain parts of the business, and certain people might want to take responsibility for collating the comments and then submitting one comment for a group, for instance. So the way that we're now doing the comments also on the website actually provides for that. You can go in and out and only submit once all completed.
Thank you, Juanita. And I love the new way of making comments. How's that?
Thank you. Thank you, Billy.
Thank you very much. We have a comment and a question from John Horsful about the BC retail page, and on specifically questions 1.4 and 1.6. So sorry, let me just go back to that page. Sorry, when I look to the side, I'm actually looking at the questions so that I try to make sense. John, your point is that you don't necessarily have the age breakdowns of your clients in certain sectors of the market. So I think that's a useful comment. And if you could give us a written feedback in the comments and some details about that, that would help us as well to understand how to deal with this. In our internal discussions, it seemed as if, yes, it would be work for most FSPs if they don't already have that breakdown, but that the information should be readily available. So if it's not really readily available, it would be particularly useful for us to understand where it wouldn't be. Would it ever be available? Is it just not available right now? And then the second part of your comment has to do with how much time you would need to be able to get that information within the timelines. Remember, you're only going to start completing the Omni CBR 2 years from now in 2024. So would this give you enough time, for instance, to start to work so that you can give that breakdown? Or would that still be a problem, and why would it be a problem? So when you give your feedback, it would be useful for us to understand that particular segment of the industry, what causes the problem, and how would you be able to do it if you were given additional time, you know, so exactly how big is this problem? How long is a piece of string, essentially? Juanita, do you want to add?
Thanks, Charene. I actually just want to understand how it could be that you wouldn't have that information, and which scenario it would be, because we worked with that indicator because we would accept that all FSPs, all entities in all these sectors would at least have an ID number. If they don't ask for the age, because I know sometimes on the application forms you ask for a ID number or a passport number, but then usually there would be an age as well that can be deducted from that. So you might just struggle with a male-female question, but you're particularly referring to the age questions, and that would be difficult for me to understand why you wouldn't have an ID number for a client. So this is just me asking to get a better understanding.
So John, if you could provide us with additional information on that, that would be very useful for us to get a better understanding of what the issue is. Then Pendeli, I see you have in the claims section, claims that are closed due to no feedback from customers have not been catered for. Could you please just give that as a comment as well when you are providing your comment? That would be useful for us to keep track of as well. Then moving on to Tufik, you say under the all business retail, business composition retail, financial advisors provide services to clients of the entity or on behalf of the entity if authorized for advice, not to the entity itself. Okay, well, we'll look at that, and if it's necessary, we'll rephrase the question. Roy, John, I see Roy has just asked whether you could not use the ID numbers to generate the ages from that. Tufik, then you ask for another definition. And then Audrey makes the comment that unless you have a great client relationship management or policy systems or insane Excel modeling skills, it will take a seriously long time to collate the data. How do you expect the FSPs to collate the data? Granted, Audrey, it is going to take time to set it up if you don't already have it set up, which is why we're having these conversations and giving you advance warning. Again, also remember what I said, that those of you who would like to test and maybe get ahead of the curve, volunteer to be part of the pilot project next year. That is going to be a great opportunity for you to test what you need to put into place and how long it will take you. And it will also give us better understanding of where there are pitfalls in the industry that we might not be thinking of at this stage. Okay, in Marincha, your passport's only on expats working in South Africa. That's true, but don't you capture the date of birth with the passport number? But that could be something that you raise in the comments and just give us a couple of examples of the challenges that you face with expats. Stuart also talks about passports being an issue. Okay, there's a comment from Rafiq to say you don't generally ask for or note the IDs or the ages on specialized short-term products such as engineering. Is that not normally issued in the company name? Is that an individual policy? Juanita?
No, so Charene, engineering would be on, as we say in the non-life space, on the commercial side. So you would have it here on your business sheet to explain it's part of your business customers that you have. It isn't a natural person usually that takes the engineer policy. If I remember correctly, you can also not be licensed for engineering personal lines through the PA as an insurer. So it will, even if you have the details of who the CEO of the company is, it's still on the business sheet, not on the retail sheet. So you need to know what is their annual turnover, which you would know for an engineer policy.
Juanita finished talking faster than I was busy typing a response to one of the chats. So the question as to how do you volunteer, if you can send an email to either juanita.smit@fsca.co.za or to myself, charene.nortier@fsca.co.za, and we'll gladly add you to the list that we will now start collating. We don't have a list yet, but we will create one and we will gladly add you to it. So maybe if you volunteer, then also just tell us what is the nature of your business so that we know, are you volunteering as an insurer, as an FSP, or if you are volunteering for multiple license categories, also what those multiple license categories would be. That would be very useful to us. Then we have a question from Christopher asking, how would you look at single policies that cover personal and commercial risks under one policy? Juanita, I'm going to throw that one to you.
That's perfect, Charene. So, Christopher, my understanding is that you would actually issue that as a commercial policy, and then usually it's the lives of the directors or some of their personal assets, like the motorboats they play with over weekends and things like that, that they add onto the commercial policy, because it's just cheaper that way for them, and it's better to have everything on one policy, even though it's their personal assets and they don't want a separate policy for it. So you would go where the main policy is, and in that line, in that way, it would be a commercial policy, according to my understanding and knowledge. If I'm wrong and it's still an issue and you still don't know where you would have put it, because it's not, like you said, it's a single policy, it's not two policies, and you can't put commercial business on personal lines, but you can put the director's personal business on their commercial policy. So that's why I would think it falls under business thing.
Thank you, Juanita. You're never too old to learn something, so I've learned something as well. I think that we have started to exhaust people. It is just after 4:15. I know that we are booked till 4:30, so we are happy to take more questions. But if you are tired, you don't have energy, but you think that you might have more questions, you are most welcome to contact us on an individual basis if you want to just bounce off something. Craig, I see your question. I'll deal with that just now. And then you also have the comment facility on the website. And as Juanita said, if you use that comment facility on the website, it enables us to do a faster comparison and analysis of the comments, which would also help us greatly with the turnaround times. I am going to deal with Craig's question first, and then Billy, you've raised your hand as well. So Craig asks, how do we report on a personal policy in joint names of Mr. and Mrs. with differing age ranges and potentially race, and can we even mention same-sex marriages? Craig, these are very good questions, and I don't think we have clear answers on that one, unless, Juanita, you want to take a stab. But this is probably the kind of thing that we would like to get your comments on, because that would help us to maybe add some extra lines to our questions.
Yeah, so my understanding, Craig, and again, you can help me if I'm wrong, but my understanding of my engagements in the industry is that you always have a principal life and a second, for the lack of a better word, a secondary life. So even in joint policies, they're not equal. You always have the main policy holder and then the spouse. So you would follow the main policy holder when reporting on this. The insurers break it down to us and tell us that it's one policy, but it's two different lives on the policy, and then they go into that detail. For you, it would be your policyholder is the main policyholder that you have. You're welcome to give us comments whether you think you would be able to give us the data on both lives, and that you would want to report on both lives, and then we can give that guidance. We didn't think that the data on your side would be that mature. We did expect it on the insurer side to be that mature, and that's why we also only then have the option for choosing either male or female gender. But if you choose it to show both lives, you can still then show them as a male or female, or two females or two males. If it's same-sex marriages, then you just count them as two, because but in my mind, it's one policy. So it's only one product being sold, and you would follow the main policy holder on that product when reporting about it. Yeah.
Thank you, Juanita. But please, if you want us to look at further breakdowns, make those comments and we will gladly consider it. Billy, you've got your hand raised.
Thanks for indulging me, Charene. This is my last question, and I can't attend tomorrow, so that's the good news. I just want to ask, I mean, it's not a question about doubting the authorities' ability or rights to ask these questions and ask these reports, and Johanna's already expanded on it, and Lazan did on the previous one. My question is just, is there not a concern from the authority side that by asking for all this information, you're actually creating reporting and record keeping responsibilities which are not currently provided for in phase or the fit and proper determination? So you're actually creating regulatory requirements by the issuance and the format of the report and the information that it requests. Is that not a concern that the authority has, that there's some overreach? It's not about asking for the return, but to be able to answer the return, you're creating requirements which are not, in terms of your financial reporting and then your data capturing of your clients, which is not contained in other legislation. Is that not a concern? Because one struggles to understand why people will have to spend the money when there's not a legislated requirement to keep these records other than the report that's being asked for it. So that's a general question, and it's just something I think potentially is going to come up later on when somebody, when people say, when they start realizing what is actually being asked and what is involved. Because I think a lot of people that, with respect, in these workshops have not done their homework. They have not watched the webinars, and they certainly haven't created dummy FSPs that they're answering for. Thank you.
Okay, so I'm going to take a stab at it, Billy, and then I'm going to give you an opportunity to just fill in as well. So we actually expected this question even earlier in the session, and when we didn't get it before break, that's why I asked Joanne to then step in and give feedback. And that's why we have legal representation in each one of these sessions so that we can answer this question. Yes, in terms of powers, like Johan explained, we have the power to ask it. We have it in the FSR Act, and we'll have it under the COFI Bill, which will become an act. And this is the return that you will be completing. In terms of making it easier for you, we have the return, one return that you're completing, instead of having compliance reports and additional information requests on a regular basis and data cleanups on a basis. So if you think of it in a long term and a bigger picture, and you think of everything that we've asked in the past, this actually streamlines the asking, okay, which also then makes the effort, not every second or third month we have to kill fires because we have to get all of this information and submit all of this information, because we will have the data. In terms of the data that we're asking it from a market conduct perspective, and this is an indication to you as an industry, and I understand it is a new thing. To actually know what is market conduct indicators and what is it that we consider, because this is a clear indication to you how we track trends, what we need to track trends, and what we need to fulfill our mandate as a market conduct supervisor. And these are the indicators that we need to track it. All of these indicators can be linked back to TCF, it can be linked back to fair outcomes, it can be linked back to the culture and the governance of your entity, and most of them can be linked back to compliance in your own act. Not all of them, but into the sectoral laws that you're currently writing business under your phase act, and whether it's writing it under the Insurance Act as well, or wherever. A lot of these questions are actually linked back for insurers, for instance. A lot of it is linked to what is requested from you in the PPRs and in the regulations, and to be compliant with that, you would have this information, and now we're asking you this information. So I think you need to take a step back, and I agree with you, everyone hasn't looked at it that way. But yes, we do have the legal rights to ask it. We understand how important it is and the liability of having this much data with us and having to use it. But you can ask any of the insurers and they will tell you that we do use it and we do give you feedback, and they've learned a lot of valuable lessons. Well, I think most of them will say that, valuable lessons from it, and most of them have implemented as a report in their business, and we're hoping to do the same for the rest of the sectors. And that is why the input into the questions and whether you're understanding what we're asking, but maybe there's a better way to ask it, that is the type of feedback that we want here. Other suggestions then to still get that market conduct indicator. Reporting on market conduct indicators is something that is done across the world, different levels for different sectors. And some jurisdictions still ask it in 3 or 4 returns that they want in a year. We're trying to streamline it into 1 return at the same time so we can do the benchmarking and so that we can do supervision more proactively and that we can do it on a group basis as well. And that is why we structured it this way. But everything that we're asking here is for a particular reason. And if you look at it, especially from the phase point of view, like Charene also indicated earlier, a lot of it is what you have in your compliance reports. It's just shifting the mind and how it's being asked. That's all. Johanna, I don't know if you want to come in here.
Thank you, Juanita. I think that you did respond quite comprehensively to that question. I can just reiterate, that the FSCA has the mandate, to enhance the efficiency and integrity of financial markets and also to promote fair customs of treatment by financial institutions. And of course, also the education, financial literacy and assisting in maintaining financial stability. So in order to reach those objectives and the mandate of the FSCA, you need some supervisory information, and that is the reason why it's requested. So it's not all within the legislation, the primary or subordinate law, but those questions, the information that's requested is necessary for us to meet the mandate of the FSCA. So we do ask those because we feel that those are relevant information for us to do what is required from us. Thank you.
Thank you, Johan. And Marilee has also raised her hand. Marilee, will give you mic access just now. Just give us a sec. You can go ahead, Marilee.
Charene, can you hear me? For some reason, my camera is not on, but I'm going to speak anyway.
Yes, you can.
Thank you. I just want to point out that everyone must remember that we are principle-based in our supervision. So we will never have legislation setting out how you should do A, B, C, D, E, or reach a specific outcome for a policyholder. The idea is that we have these principles into which all models of business can fit, and they must show us how they achieved the outcome by whichever way works best for them and the client. So we cannot set out all these questions and rules in legislation. It will make it just impossible and too long, and we will miss some things. So it's about the idea behind what we're trying to do. So yeah, I just wanted to add that. Thank you.
Thank you, Marilee. And I think the point that you raised, that it's about principles and not rules. We know from experience how hard it is to make the shift from a rules-based supervisory environment to a principles-based environment. And hopefully by analyzing your information, the data that you already have in your business to answer our questions, you will also find it easier to move towards a principles-based approach in your own business. And you will find that you now have information in a way that you can use it, because our experience of engaging many FSPs is that they have a lot of information available about their customer base and about their product base. But they deal with it fairly intuitively. They haven't necessarily sat down and done the data mining exercise. So we do hope that you will also, by answering our questions, find benefit to your own businesses from this. And I think at that point, I'm going to say thank you so much for everyone's participation. We hope that we've dealt with most of the questions. We know that there are some questions that we posed around definitions, terminology. We've taken note of that. We will definitely consider that going forward. We'll include that in the comments that we need to consider. Those of you who want to participate in the pilot, you can either send an email to Juanita or to myself or to both of us, and we'll add you to the list that we will collate, and then we will contact you towards the end of the year so that we can then sort out participation in the pilot project for next year. But in the meantime, you have until the 10th of August to comment. We look forward to your comments. And as the point has been made, we value every comment, whether you are a large organization or industry association representing many constituents, or you are just representing yourself. Your comment is valued and we really look forward to your participation. Thank you so much, and remember that we have another workshop for FSPs tomorrow morning at 10 o'clock. If you haven't thought of the questions that you wanted to ask, you didn't get an opportunity, and you have a brainwave overnight, do please join us tomorrow. Thank you so much, everyone. Take care. Be safe.